JFD, just fair and direct.
Okay, hello and good morning, everyone. Once again, welcome to JFD Traders Espresso with me, Darius Anucauskas. I do apologize for a few technical issues here during the first kind of attempt of running this video, so I hope you guys are going to join this session right now. So yeah, guys, thank you very much, and I once again apologies. Thank you very much for your patience and apologies for the kind of little technical issue here, but hopefully we can get back to normal here. And well, as always, guys, before we jump into the charts, let's quickly have a read through our risk disclaimers. So once again, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, guys, also again, the apologies for the little technical issue here. So before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. Feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts. Now, given that I have kind of lost a little bit of time here, and I need to kind of run through this very quickly, unfortunately, basically, the first one I'll pick up on here is Nikkei. With Nikkei, I mean, I've mentioned this one, and yesterday, for example, I said that although we saw a bit of a decline here, I'll stay a little bit more on the positive side because, well, as long as it remains above this 21-day EMA, there is still a chance for this one to move back up here. So we also managed to climb back above the 28,527 territory right here, but we failed to reach the January high, which is around the 28,980. So that means that we will, well, I mean, take a bit of a cautious approach because, again, this week ended below this hurdle. I mean, as you understand, the index is already closed. However, still, don't get me wrong. I mean, it depends on how this how today's session is going to go through in Europe and in the United States. Depending on how that's going to go, I mean, if the indices there are going to rally, then, well, on Monday probably we'll come back here and we'll see probably a nice opening gap here, maybe even pushing above the January high. If so, then yes, I'll aim for higher levels. My next target is the 29,519 zone, and that's the low of May of 1990, if you remember that, guys. So yeah, keep your eyes on that one. In case this index starts dropping heavily to the downside, I'll keep an eye on that 21-day EMA. If that gets broken here, I mean, this could open the door towards lower areas. However, still, as I've mentioned before, my preferred area to keep an eye on is the 27,600 zone. Hong Kong's Hang Seng Index. Also kind of, well, it actually is still open. It's still open for another kind of 45 minutes or roughly around there. However, here you can see that previously I talked about Fibonacci's. I mean, it perfectly kind of tested that 50% retracement on the Fibonacci. So in a way, everything kind of here worked out nicely. But now I need to probably take a bit of a fresh look on this one. So let me just remove all the drawings. And of course, as you understand, you can probably see yourselves here that there are a bunch of upside lines, although tentative ones, but nevertheless upside lines that are still kind of in play here. For example, one of them is this one, drawn from the low of the 25th of September. The other one is right here, drawn from the low of the 30th of October, and so on, so on. I mean, we can draw this one, then we can draw another one right here. From this low. So basically we'll have ourselves something very, very interesting. The only thing here to mention is probably going to be the the idea that I wanted to talk to you from the very short-term perspective. So in a way, another upside line here drawn from the low the 29th of January can be drawn here, but in this scenario it will be a little bit more something of a potential ascending triangle pattern, which means that we have our clear barrier right here near the 29,519 zone. You can see that this area is kind of still providing good resistance. So yep, that's something to watch. And again, also depending on how the US markets are going to trade today, and I mean, we could see the futures here pushing higher, and then we'll have ourselves a nice opening gap here to the upside going into next week. So keep your eyes on that one. Quick update on German DAX here. Yesterday I've mentioned this one, and I also said that in a way, as long as it trades above this downside line here, there is a good chance for this one to move higher. And as you can see, we've not only managed to push higher, but we also managed to overcome and stay above that psychological 14,000 zone. So now my next target is the 14,131 zone, and yep, according to the cash index right now, we can see that the price is on its way there, and it's currently trading near the 14,075 territory. So we're not far from this hurdle here, the highest point of January. So let's see if we can reach that, and let's see if we can overcome it. If we do overcome it, my next target, and for that I need to kind of actually. Oh, I'm mistaking with something else here. Basically, if we're going to overcome the 14,131 here, well, that's going to be a new all-time high, guys. So, I mean, and that's going to be uncharted territory, and we could just assume that we could go just for those nice kind of even numbers like the 14,200, then 300, 400, and so on. But again, let's keep an eye on it. First of all, let's see if we can actually manage to overcome this hurdle today and hit a new all-time high for DAX. So yeah, let's see how all that's going to play out. Now jumping into DXY, and of course before I continue, just a quick mentioning that it is quite an interesting day today. We do have a bit of data coming out. Well, it's a big, in a way, considered to be big. U.S. non-farm payrolls, yes, so that's the one to keep an eye on today. It is expected that the figures should come out higher than the previous one. Not as much as kind of, let's say, not a huge jump. But still a decent one, I would say, because I mean the previous number was at minus 140K. Now the forecast is at 50K, and to be honest, if something comes out above that 50K, I mean that's just gonna probably work well for the market, and we could see the indices popping higher, and then yep, then we'll kind of take it from there, guys. DXY here, I mean you can see that it's pushing higher. In a way, yesterday it moved nicely above that 91.24 zone. So yep, in a way that's all nice and dandy, I would say. And now my next target, as I said before, is this 91.75. We might reach that today, maybe even before the non-farm payrolls. And then if the if the numbers are going to come out better, well, I mean, the dollar might kind of take a bit of a standstill, or maybe even decline, because nowadays the USD is kind of seen as a bit of a safe haven. So yeah, keep your eyes on that idea, or have in mind that idea. Keep your eyes on this chart, and like I said, keep your eyes on that 91.75 territory. That's my next target. I know that we're not far from there, but again, DXY is not making huge swings, so I would say that this 20 kind of pip move here is quite a decent one. 20-point move here is quite a decent one here. So yeah, for now that's going to be my aim. Gold, jumping into gold, and beautiful move here, beautiful kind of drop below that 1819 zone. I talked about this, guys, and basically everything's so far working according to the plan. So the plan was that if we see a drop below that 1819 zone and we see the daily candle staying below it, then my next target is this 1765 zone right here, marked by the lowest point of November. Again, don't get me wrong, we could see something like this, maybe a small little correction here to the upside, but if it struggles, let's say, to get back above the 1819 zone or this 200-day EMA, then yep, another slide is possible. So that's my main scenario right now. In terms of the upside, I'm still sticking to the same game plan, and I'm waiting for that push above the 1875 territory in order to get a little bit more excited with the upside. Now jumping into Bitcoin, and Bitcoin here is, let's say, pushing again, trying to push higher. Yesterday it failed to move and stay above this 38,710 zone. I'm still keeping an eye on it, because again, a nice good break above it, and would confirm a forthcoming higher high, and more buyers could join in here. So we are at a very interesting spot. Everything's kind of leaning a little bit more towards the upside right now. However, again, let's go slowly, step by step on this one. First, like I said, I would like to see a push above the 38,710 zone in order to go for some higher levels. Now Litecoin, very quickly on that, guys, and Litecoin is also very interesting. I mean, it's trading above this downside line that it got broken here this week, and at the same time it's kind of still balancing above the 21-day EMA. So basically this idea that I mentioned before, that we could see a bit of a correction here, but if the price stays somewhere above the 21-day EMA, we could see another push higher. So let's see how this is going to play out here. For now, I'm leaning a little bit more towards the upside, and first of all, I mean, we can get rid of this this downside line here, and actually we can reuse it, because we do have ourselves this short-term tentative upside line here, which also could play out nicely. This one's drawn from the low of the 27th of January, and For now, guys, that's going to be the game plan. Even if we see a decline here on Litecoin, well, we still, if it remains above this upside line, there is still a chance for the bulls to step in. However, that's the reason I have, and I've mentioned this before, I have my downside scenario from somewhere around here, this 125.95 zone, and this was seen previously as a good key support zone. Now it could take the role of there we go. It was seen as a good support area. It could be seen right now as a good one as well, but for us to consider this move here, we would still first need to see a break of this upside line. So everything's kind of leaning right now towards that upside line, and if it remains intact, the upside scenario is still valid. If this upside line gets broken and we see the price falling below the rate falling below the 125.95 zone, now that's where I'm going to go for a bit of a larger correction to the downside, because don't forget, we're still trading above this upside line here, drawn from the low of the 20th of October. Now jumping into a few pairs, AUDCAD. Of course, the CAD, the Canadian dollar, is going to be the one to watch today as well, because we do have the Canadian employment figures coming out, so that's going to be an interesting one to watch. We also have the Canadian IV PMIs showing up later on, so yep, a lot of excitement, a lot of kind of data today. So let's see how all that's going to play out. Now, in terms of AUDCAD here, previously, as I talked about this hurdle here, the 0.9775 zone, I needed to see a drop below it in order to aim for some lower areas. But what I was said before as well, that on this pair, that I'll go for a bit of a larger correction, because again, we are still trading above this upside line. As you can see, this upside line drawn from the low of the 21st of October is holding the rate perfectly. So in a way, we need to be very careful, because we are currently stuck between these two lines here, this medium-term upside support line and this short-term downside resistance line. So if you want to aim for some lower areas, guys, well, wait for a break of this upside line here, because again, don't rush into anything yet. Let's be careful here, and just to be a little bit more on the safe side, to drop below the 0.9715 territory right here, marked by the low of this week. Now that's what could open the door towards lower areas, and my next target will be this one right here, the low of 21st of December near the 0.9560 territory, and then we'll take it from there. For the upside, if you want to look at some higher levels, at least wait for a push back above the 0.9775 zone right here, because at the same time the rate would be placed above the 21-day EMA. USDJPY also something to keep an eye on. I do apologize, guys, that I'm rushing through this a little bit, because again, my colleague steps in after me and I did have a few technical issues today, so apologies for that. USDJPY here, basically the pair moved nicely to the upside. I mean, this scenario that I talked about previously, well, it didn't really kind of, let's say, well, it did work out. I mean, it did partially work out, because my target was the 200-day EMA. However, what I was saying then, that in a way I'm going to take a careful approach here, because again, if it stalls near this area, then we could see a slide back down. However, yesterday I also mentioned that if we overcome this area, my next target is the 105.67 territory right here, which we managed to reach, almost reach today, this morning. Now the big question here is what we will do next. To be honest, again, everything's kind of going to go back today towards the non-farm payrolls, and continue monitoring the situation here. If we get an overshoot here above this 105.67 territory, or should I say if we get a pop above it, then my next target is the 106.11, marked by the high of, or should I say the highest point of October. In terms of the downside, if it starts dropping back below the 105.35 territory, I'll start looking at some lower areas. GBPUSD, quickly on this one, look at this beautiful move. Again, let me just clear up the chart here a little bit. So first of all, this no longer needed, but I'll keep an eye on this hurdle, because somehow this area of resistance is acting like a magnet. Although we get a moves away from this level, still it kind of, the rate comes back to it from both sides, and yep, and now we're seeing this again, a violation of this downside line again, which, to be honest, we can get rid of because no longer valid. Now the main question here is, can we see a stronger push above the 1.9115 territory right here? If we can, and we can then overcome that 100-day EMA here shown as the green line, now that's where it could become very interesting for more buyers. So keep that in mind, guys. EURGBP here drifted nicely here. So basically this scenario worked out perfectly here for me. I'll remove this arrow, and now the big question here is, where will it go next? I mean, for now, to be honest, I'm still targeting this this lowest point of April of 2020, and that's roughly around the 0.8671 zone. Again, don't get me wrong, along the way we could see a bit of correction here. However, for now I'm still leaning a little bit more towards the downside, guys. And even if we do see a correction back up here, don't forget that we're trading below this downside line right here, taken from the high of the 21st of December, and in a way this downside line could still provide good resistance. If that line gets broken and the rate starts climbing back above the 0.8826 territory right here, now that's where we could start looking at some higher levels again. And finally, EURUSD. So perfect move here. I mean, yesterday and this week I talked about this, and I was saying that in a way, I mean, my target is going to be this 100-day EMA, this one near the 1.1980 zone, but if that gets cleared, then my next target is the 1.1924. Again, be very careful today. We do have, like I said, the non-farm payrolls, so those are going to be the ones to watch. Yeah, guys, I cannot stress enough, probably with this one, with the euro dollar, if there's nothing surprising in the data, then yep, we could see this further slide here. However, if something comes up on the positive side from from the US, maybe we could see this one kind of pushing back a little bit here to the upside, because again, as I said, US dollar lately it acts as a bit of a safe haven, so it performs better when the markets are doing worse. But however, again, it's sometimes the opposite. It's a bit of a confusing time, I would say, I mean, the moment. So that's why for now I'm gonna just go purely from the technicals here, and my next target is this 1.1924 zone. So guys, I'll have to wrap it up here. I do apologize for rushing through this one a little bit, because again, I did have a few technical issues which kind of pushed me away a little further, and I need to step down right now for and allow my colleague to step in with his session. So yeah guys, thank you very much for joining in, watching this one till the end. Join my video later on. My traders tea time is always 13:15 GMT. Thank you very much, and bye bye.